Hello, my name's Damen Purcell from Australian Fund Monitors, and today we're going to be joined by the team from Spatium Capital. The Spatium Small Companies Fund was released in July 2018 and has had very strong performance since its inception. As you can see from the graph on the screen, the fund performed particularly well during February and March of 2020. And more importantly, as we came out of that downturn, the fund has performed very, very strongly through May and June. This is evidenced by the way the team manages both up and down market capture, and you can see this in the graph shown on the screen here. Similarly, their distribution of returns has showed that when the market's fallen quite significantly, they've managed to buffer some of those falls. I'm joined from Spatium Capital by Jesse Moores and Nick Quinn. Welcome, guys.
Hi, Damen.
Thanks for having us, Damen.
To call the last couple of months tumultuous is an understatement. With Spatium operating a small companies fund, you are closer to the volatility than most. Tell us a bit about how you've seen the market that we've just been through.
Yeah, definitely. I mean, as we've all seen in recent times, that massive fall off through February and March was unlike anything we've seen before. I think the fall between mid-Feb to sort of mid-March, mid to end of March was almost the same as 12 months during the GFC period, which was just astounding. And I think almost just as surprising when we sat here having discussions with some of our clients at the end of March, that rebound that occurred in April and May was just completely unexpected. It really leaped back up. And I think for those of us that were invested in the markets at the end of March, it was such an interesting time because no one really knew which direction it was going to head next. We're in such uncertain territories. That real exponential growth of obviously COVID-19 cases, which we seem to have somewhat of a handle on now in Australia and some of our neighbouring countries, and the US has just let it sort of run away from itself. We're really uncertain of where that was going to go next. I think even now we're sort of assessing where the market's at and where that future looks. Even the government's announced some of their policies this morning around job seeker and job keeper continuing. And what that'll mean, I guess, for the Aussie market.
And I think I'd add to that as well that we saw from a volatility perspective the VIX in the just over 80 points through the heights of March. In a normal cycle, we'd expect it to be in your sort of your teens to your low 20s from the points perspective on the VIX. So to say that it was tumultuous is possibly an understatement from that perspective.
So how do you guys see the market going forward? Coming out of March, we're now into July. Do you feel that the market's got ahead of itself?
Yeah, definitely. I mean, it's even the New South Wales outbreaks are starting to get concerning. What does that mean for an Australia-wide lockdown? We're keeping obviously quite a tight eye on end of financial years numbers coming through, and again, some of the government policy side, just to see what their direction they're going to take next. I think we're not a macro fund by any means, but we do like to keep a little bit of a finger on the pulse on that broader spectrum. Even looking internationally, the US rebound, a lot of those other sort of metrics that we sort of look to that leading the world, we're really sort of starting to see what else can central banks do to stimulate the economy. We're seeing that those low interest rates, the money's flooding the market, and now even obviously in Australia, and some of the US, those real socialist policies of giving out cash, job seeker and job keeper, and other similar policies around the world, unheard of and totally unprecedented. Everyone's getting a bit tired of that word, unprecedented, but it's just what keeps unfolding. And what does that mean for spending? What does that mean for consumption? What does that mean for GDP growth and inflation, steering us away from a recession if it can be avoided? And then in terms of markets, they're trying to then price all that information in. It's wild at the moment, and it's very uncertain what's going to happen next.
It's probably also an interesting time to ask that question, given today, Damen, as Nick touched on, that Scott Morrison just announced the extension of JobKeeper and Seeker to March next year, albeit I think at a reduced rate. So given that we're having this chat right now, it would be interesting to see over the next couple of months how the market does react and price all of that in. So it's still a bit early to tell, I would think.
Looking at the portfolio in more detail, are you reacting to the recent rotation into value, or are you sticking to certain sectors?
I think one of the things that's always worked well for our strategy is just by nature of our approach, we're quite agile and flexible. So given that we might be facing a more extended period of uncertainty compared to most cycles, we would think that we'd be well placed at least to be able to capitalise on if there are continued dislocations and mispricings in the market. So I think we stick to that process and continue to follow that through over the next little while. Nick, if you want to add.
Yeah, just to echo that, I mean, the fund, we're turning over our average positions every sort of 30 to 45 days. Some slightly less, some slightly more, of course. But yeah, we're getting that sort of full portfolio turnover, again, every sort of 30 to 45 days, sort of 9 to 12 times a year. We are seeing some real patterns of undervalue or overselling coming from, obviously, the private market, the mums and dads sitting at home, pulling funds out of some of their share portfolios. We saw that in March. We've seen a run back in, obviously, through April and May, and just getting those sort of movements where people are possibly overreacting to positions. And as Jesse said, we stick to that process, try to find, I guess, the cheap end of the market and what's currently oversold or undervalued, and we're looking to sort of snap them up at some good prices.
You have strong outperformance since the fund started. What do you attribute this to most?
I think similar to what we're currently looking forward to or at, what sort of helped us the last 12 months and even prior to that. We are buying the cheaper end of the market. We're buying stocks that are currently sort of undervalued or out of favour. We sort of saw that through the recent months, some of the oil movements, some of the real estate investment trusts, obviously some of the healthcare positions. And that sort of undervalue has led us to have an up market capture of about 110%. So we go up when the market goes up, but a down capture ratio of only sort of 50 to 52%. So when the market falls, we tend not to fall as far. And again, that sort of evidenced, I guess, our March results. The market fell 23%, the benchmark fell 23%. Spatium only fell 11%. So I guess if a bit of a crude example, it's sort of 2 steps forward, 1 step back for us. We sort of go up when the market goes up, but we don't tend to fall as hard when the market comes down. And I guess that placing us as a defensive manager is a good spot right now when everything's so uncertain.
Oh, absolutely. And I think, that's the one thing that a lot of investors are looking for, is that opportunity to invest with someone who's going to help them out when the chips are down. Guys, thank you very much for your time today. Really appreciate it. Congratulations on the fund. It's doing very, very well. And we hope you have a great day. Thanks very much.
Thanks, Damen.